Hello traders, welcome to this video. I want to use this video to explain a certain A setup that I feel everybody should know and everybody should be able to recognize it when they spot it. So I'm here to break it down, into the atom of it, so that you'll be able to, recognize it. It will be easier for you to backtest it, and it will be also easy for you to, use it to trade to improve your win rate. This is an A plus setup, like I said, and I want to simplify it, for you, in the simplest form ever. All right, so let's dive right in. So most times, a lot of people, when they actually want to trade, what they try to pay attention to is to find something that is easily recognizable or easily identifiable for them to trade. People find trading complex, because they don't have or they don't know exactly what they are looking for. They have tons of information in their head and they don't know which, they should go for. And in turn, everything becomes cloudy and it affects their sense of judgment. But this setup that I want to show to you and the way I want to present it will actually help you to improve your Forex trading entries for profitability. So from what you can see, I have the usual traffic sign that you guys know, which is your red, your yellow, and your green. So conventionally, at the traffic stop or at the traffic light, the three major colors you see is the red, the orange or the yellow, and the green. And they signify something. When you see the red, it simply means stop. That means all vehicles should stop, right? And once the red turns to yellow, it simply means that they should get ready to move. All vehicles on that lane facing the traffic light get ready to move when you see the yellow. And then when you see the green, it is a signal for you to actually move. Now, I want to bring this into Forex and try to break things down for you to be able to recognize it. All right, so let me just shift this to the back right here. Okay, so conventionally, I said when you go to the traffic stop, right, this means stop. This means stop. I want to put it to white. So when you go to the traffic stop lights, or you're at the traffic junction, this means stop. Okay. Then the yellow means ready. The yellow means ready. The yellow means ready, right? And of course, the green means go, is a signal for everyone opposing that traffic lights to go. So this is the conventional meaning of the red, the yellow, and the green for a traffic light. Now, let me bring this down to Forex trading, all right, to simplify the A plus setup. Now, the red in Forex trading, the red in Forex trading, the red in Forex trading, the red in Forex trading signifies liquidity grab. Liquidity grab. Let me change the color. The red signifies liquidity grab. Okay. The red signifies liquidity grab. So once there's a grab of liquidity, that is the red in Forex trading. Okay. Now, the next thing is the yellow. So when are you ready? Like when should you be ready to want to take a move or want to take a trade after the liquidity grab? That is what I call, after liquidity grab, we have what? We have the break of structure. After liquidity grab, we have what? We have the break of structure. The break of structure. So break of structure is telling you to get ready to take a trade. Break of structure doesn't mean you should jump into a trade. So break of structure is what is the ready. Now, what is the green? The green is not you executing the trade. No, the green is inducement or liquidity engineered. The green, sorry, the green is inducement. The green is inducement. Or I can say engineered liquidity. Engineered liquidity. Engineered liquidity. Or I can call it inducement. I can call it inducement. All right. So once these are checked, then you are ready to trade, and always ensure that you trade below inducements. Trade below or above inducements. Inducement is liquidity, the liquidity that needs to be grabbed for price to receive sponsorship to move. Okay, so I said liquidity grab, break of structure, liquidity engineered or engineered liquidity, which is inducement. So let's come back again. Liquidity grab is your stop. Break of structure is your ready. Engineered liquidity is your go. So you want to trade below or above the engineered liquidity. Now let me give you in graphical formation. Let me show you how it's going to appear so that you recognize it very well. Okay. Now this is the first form. Now we have price ranging. Let's say, for example, for a buy setup, we have price ranging. That is, price is consolidating. Price is consolidating. Okay. Now, what move are you expecting? Once you see a liquidity grab, this is a liquidity grab. All right. This is a break of structure. And this is a liquidity engineered. Okay. So that simply means that you want to trade. That simply means that you want to trade below the inducement and, continue upward. Now, let me make this simple for you. So whenever I see liquidity grab, this is your stop. Okay. The next thing, you see a break of structure. This is your yellow. And the next thing, you see an inducement. This is your green. This is your green. So what you want to do is trade below the inducements. Trade below the inducement. There will be certain zones or certain POI that you can actually trade from. So please take note of this. So we can see what happened here. Price ran all the stop to the downside. What happened? Price broke structure. This is a BOS. Okay. Then what happened? Price engineered liquidity. This is a very nice setup. This is a very nice setup to trade. So this is how it comes. Grab of liquidity, break of structure, engineered liquidity. Then you want to trade below the liquidity or the inducement areas. This is a very nice setup you want to, you want to take note of. Let me increase, the thickness so you can see it very well. Let me put it at 3. So this is the thickness. Stop loss run, break of structure, inducement. You trade below the inducement. Now, this is the second way that price can also present itself. So can have price, do something like this. Price is in a range. Price is in a range. Price is in a range. Then what happened? We have a break of structure. Sorry, we have liquidity grab. then price can actually engineer liquidity before breaking structure, so that price will come back to mitigate or to trade below liquidity area. So from what we can see liquidity grab, we can see break of structure, and we can see liquidity engineered. Okay, we can see liquidity grab, we can see break of structure, we can see liquidity engineered. So this is your stop, ready, and go. So please, I mean the go, which is the green, is not you buying, is you identifying where inducements are. Okay, so you cannot trade below or above that. So this is a basic example of how it appears. Okay, it's not less for you to now, align it with structure, know where you are trading from and know where you are trading to. All right, so this is a simple A setup. Let me recap all over again. So I say just like the way we have the conventional traffic lights, just like the way we have the conventional traffic lights, where your red means stop, your yellow means ready, and your green means go. In Forex trading, the stop means liquidity grab. Break of structure is what it means you should be ready to trade in that particular direction. Then once there is engineered liquidity, it's simply telling you to what to go. So take note that you trade below or above inducement areas or engineered liquidity areas, which is these two setup that I've given you. If you can wait patiently to always see this setup on the chart, you are definitely going to make money. So let me take you to the chart now for a BTC USD trade that I analyzed and I posted on my Telegram, for people to follow through. I even did a video on it and price materialized. So let's take a look at it. Let's take a look at it. Okay. So this is basic. First of all, you want to identify structure. You need to know where price is coming from and where price is going to. So you trade adequately. You can see structure. You can see we are trading higher highs and higher lows, higher highs and higher lows, higher highs and higher lows, higher high, higher low. All right. And price created a new what? A new higher high. Okay, so basically we can see that the structure is what is bullish. All right, and after price took out this last external liquidity here, we have price trading back to what? Back to discount. So that means I'm expecting buy any moment from now. So let me take a look at the immediate trend. Once I have a new high, a new low that has created a new high, I have a new trading range. So my new trading range is from here, this low, towards to this high. This is my new trading range. So if I want to trade, I'm going to trade inside what? Inside that trading range. Okay, and I'm going to trade inside that trading range, and price is currently close to discount. That means we are actually still bullish. Not until price gives me reason to want to sell, we are actually still bullish. So basically, this is my 16-hour time frame. It was where I spotted the cleanest of charts for me to know what to do. So we can see what happened here in this immediate trend. Let me clean this so that we can see very well. So in this immediate trend, what we have is purely an upward trend structure. All right. You can see that price had a high here. I mean a low. We had a high. We had a low. Okay. We had a high, and price is back to this low, and we're expecting price to give us reason to want to buy to the upside. Now, this is what I have. Okay, so let me just highlight my recent highs and lows. You can see that price took out this last significant high. We have formed a new high, and of course, very much advisable to trade below this low. I mean below this high here, because whatever broke this high is below this high, and it is at discounted area. So price will need to engineer bases or regions here that price will use to buy. Now, let me go to a much lower time frame to see more details here. Let me go to a much smaller time frame to see more details here, to see how price has been grabbing liquidity and has been moving. So we can see all the liquidity engineered around this area, all the liquidity engineered around this area. Price actually came to take it out, and price mitigated this base right here. Price mitigated, this base right here, right? And what happened? We came and took out this high, this last significant high. So just before price took out this last significant high, price has taken, major liquidity, okay? You can see that price took out all this liquidity. This is more like a liquidity grab, okay? And this is my break of structure. So this is my liquidity grab. This is my stop, liquidity grab, okay? And this this movement to the upside, is my break of structure. That simply means I'm ready to what? I'm ready to buy, right? So this is liquidity grab. Sorry. So this is liquidity grab. Excuse me. So this right here is liquidity grab. All right, this is stop, liquidity grab, and this is break of structure, BOS. That simply means that we should be ready. We should be ready to do what? We should be ready to buy. All right. So now I need to spot my inducement areas, which is the goal, so that I can know exactly where to trade from. So I spotted it cleanly, I spotted it cleanly on the 16 minutes time frame, which was what I posted. I spotted it cleanly on the 16-minute time frame. So we can see what we have here, that this is actually an inducement. This is an inducement. This is an inducement before this base that we have here. This is an inducement before this base. Okay? This is an inducement before this base. So this is an inducement before this base. And so this is my goal. This right here is my goal. This liquidity right here is my goal. So, and I said, always trade below liquidity areas. All right. So this is my available demand. This is my available demand. And, I gave the limits for people to actually execute the trade. I gave the limit, and the demand was between 68,000 demand. Okay, $67,000. $7,000. So it is between 67 and what? And $66,000. So that is the demand. $66,000. So that was a demand I expected price to to mitigate and buy. And of course, my target is going to be the next external liquidity, which is the recent all-time high that BTC attained. That was 73,000. So that was going to be my final target, for this particular trade. So my final target for this particular trade is going to be what? It's going to be 71,000. No, $73,000 rather. 73, $1,000. That was going to be my final target for this trade. But my take profit one, price is moving from liquidity to liquidity. My reasonable take profit one, or regions where I should actually secure partials, is what? Is this base that I had here, which was my $71,000 mark. So I had the intention to take major partials there and leave the rest to run. This is my $71,000 mark. So this is my, logical TP. Just in case price wants to, reverse, you never can tell. All right. And I gave this out. You can see that on your screen. that I gave it out. In fact, I even used it to record a video and I posted and I told people to actually, take note of it. Take a look at the video.
On the right track. I know you are failing, but keep failing forward. For the chart down below, it's BTCUSD. I'm looking at price coming down to this demand, the 66 to 67 demand after inducement of this liquidity. If price taps into this demand and gives me confirmation, I will be interested in buying BTC, and I will take my profit at $71,000 because there's a control supply there. And of course, if this demand holds, eventually price might actually take out the last external liquidity that was formed, which is the $73,000. So take note of the charts that is displaying down below. Follow through and see it materialize if it fits into your trading system. Have a blissful week ahead.
All right, so, and of course, this is my last available demand that should actually hold price. I've said it in some of my videos before that for an uptrend, the lows actually sustain the trend. All right, so this is actually the last demand for price to use to move. Okay, and I wanted to trade from there, and my target was going to be, this high that was here, and this occurred just before the US election was counted. When Donald Trump won, there was a spike in the market. So let's see what happened. It was so fast. So price mitigated that and of course hit my target immediately. You can see my entry on the screen. You can see my entry right there on the screen. Price did that, and it was a very, very nice and perfect setup. You stop run or liquidity grab, break or structure is already, then look out for inducement and trade. So guys, let's look at the second trade I caught for BTC. So after price expanded, from that call, from the previous call, price, expanded so well, I couldn't get a very perfect entry. After price hits targets, I didn't trade BTC all this while. I was just waiting for price to give me, more reasonable data that I'm familiar with. So you can see that for days, day 1, day 2, day 3, day 4, day 5, day 6, day 7. Like I didn't trade all these days until price gave me something, something clear. So let's check this immediate structure. As long as I'm concerned, we are still, bullish for BTC USD. So let's check the structure. So this was where I met price. All right. So let's check it out. So this is my low. I had a low here. Let's use this at black. So this is my immediate structure. This is a low. This is a high. This is a new low. This is a new high. Of course, all those things were playing. This is a new high. Price engineered liquidity. What happened? Price came to grab the liquidity, tap into this, and started moving. But that's not my concern for now. So price, created a slow. So as much as I'm concerned, this is my last external liquidity. Okay, this is my last external liquidity, and I am actually still bullish. Okay, so I'm just waiting to see what price wanted to do. Now, if you check this immediate trend, now this is my most recent high, which is what meant to be what I want to target. Price has come to mitigate my last low, and this last low actually held. So if I check this immediate structure down, low, high, low, lower high, lower low, major structure. What happened? Price came to trade above this guy. This is a break of structure for me. This is a break of structure to tell me that, oh, I think we are moving up. This is a break of structure. If you check it, price took it out a little. So this is a break of structure. So that simply means that this move down here has ended. Immediately, this break of structure occurred. All right. So that means that my buy is going to be around this area for me to actually come and take out this high, because structure has been broken already. We cannot go lower anymore. So now let's see what price started doing here. So what now got me interested again was this break of structure that I had here. Price still took out this guy here. All right. So that simply means that I needed to see what's up. Let's look at the liquidity grab, the ready and the engineered liquidity. So from what we can see here, before this last break of structure happened, of course, I know that this move has ended. We have started another move. Let me highlight the move that we have started. This is high. Okay. This is high. I mean, this is low, this is high. This is higher, low, higher, high, higher, low, of course, higher, high. Okay, now this structure that has just started, we'll definitely go and take out this guy because this guy's structure has been taken. Okay, now let's see what price did. We can see that all the liquidity present below here has been grabbed. So this is a grab of liquidity, which is my stop. This is a grab of liquidity, which is my stop. Red. Now, price trading above this guy is my what? Is my break of structure, which is what? Which is ready, which is the yellow. And now I want to spot out for engineered liquidity. But the engineered liquidity I'm going to spot out for is for this range here. Is for this range. Now, if you are familiar with my videos, I've told you times without number that Asian highs and lows are potential liquidity area, except if they align perfectly well with structure. So if I'm to pick out liquidity areas around here, what I just spotted was what? Was this Asian low that I had here. This Asian low. The indicator that I use is Asian Session Range by Rob Minty. You can search for it. Okay? So this is my liquidity that I was looking out for, which is already a discounted price of this impulsive move. This impulsive move that you see here. This impulsive move. Okay? This is my go, right? That is my go, which is the green. And I told you that the green means engineered liquidity. And what do you want to do? You want to trade below what? Below the engineered liquidity. So I had a very clean base here. I had a very clean base here. Okay. I had a very, clean base here. And that was at 89,600. So the price I wanted to buy was what? Was 89,600, dollars. I posted it on my Telegram. You can see it right there. I posted it on my Telegram for people to take note of what I want to do for BTC. So that means I want to buy from here. And of course, what will be my target? My target is going to be the last external liquidity. This is just basic alignment of structure and liquidity. Okay, so this is going to be my stop loss, and my take profit is going to be here. Very basic. Stop, break of structure, ready, liquidity, go. Trade below the go. Trade below the go. So, and let's see what price did. Price came activated. I carried them along. I posted that price had activated on my, Instagram. And let's see what price did. Price crushed the target. You can see. Price crushed the target. And of course, BTC is still buying. And I think we're currently at 90. I think we'll go to 98,000. Okay, I've not taken any trade yet. But this is where we currently are. So ladies and gentlemen, this is an 8+ setup. You want to go and study this. You want to go and backtest this. It works. I promise you it works. It works most of the time, especially when you spot it. It works. Stop hunts, liquidity grab is the stop. Break of structure, like I said, is the ready. And engineer liquidity is the green, and you trade below or above engineer liquidity. Guys, I want to believe that you understood everything that I explained here. It doesn't get any better than this. A lot of people out there have, different strategies that some have even named and given different. Don't let things confuse you out there. Forex, the complexity of Forex trading lies in the simplicity. But a lot of us run away from the simplicity and we go and find things that are complex. Please, I want this video to change lots of life. I want this video to affect your trading positively. Go and check this out. Once you understand this and you have backtested it, you will be patient enough to wait for it. And once you see it, you are going to eat from the market. I promise you. I promise you. Thank you so much for watching this video. If you need any inquiries about my mentorship, or you want to further your learning, or you want to have a mentor that can teach you properly, teach you to understand, and also monitor you to progress onto profitability, do so well to click my Telegram link, in the description of this video or the comments, and chat me up on Telegram to inquire about my mentorship. Let's find a package that works for you, and let's get you profitable. Thank you so very much. I love you. I remain Mr. Peak FX. Bye-bye.